the dollars that you're saving on the property tax exemptions? And if so, how do you ensure that you get that kind of process to work before you close?
Sure. Yeah. So it's not dollar for dollar. There's usually a benefit to us as the owner and investor. And so to put it in perspective, I'll give you an example. Like the latest deal, we're projecting to lower the rents by about $217,000 annually.
Wow.
And we're going to have about $1 million in tax savings.
Wow.
So that it offsets it and it creates positive cash flow. It reduces our expenses pretty significantly, Sam, which is obviously reducing risk. And so that's usually the offset. That's not always that simple. There's a lot of moving parts here. It's a partnership with the housing authority in the local region. And so there's a lot of legal paperwork, documents, structure, and then, of course, getting the tax exemption to be approved prior to closing.
Getting to the point where you have accepted offers, all those things, putting, earnest money down, it seems like this would be part of the equation that you'd really want to have firmed up before you get to that stage. Is that the case, or is this kind of it just, when it happens in the process, I guess?
No, you got to know what you're doing. Well said. So, this is a process for us where we're partnering with an operating partner, Sam, which is our business model, where we source and identify and partner with other investment groups that are specialists in one thing.
Right.
Get to know them, like them, trust them, invest with them, and then we get access to these kinds of deals. And so they are experts in this space. This is where they focus daily. They have 65 staff at just their headquarters, several hundred more across the properties, large firm, a few billion of assets under management. And so that type of pedigree, Sam, comes with these types of, I call it more unique, favorable for creating a win-win type of investment. And they're experts at the process and the structure. They've done it many times before. And so we come in, we underwrite, we evaluate, we ask a ton of questions, we structure the deal from an equity perspective as well internally, where we can go out to our investor group and say, hey, we really like this deal. Here's why. Here's how we're going to do it. And here's how you can participate if you're interested. So that's kind of how it all works. But from the acquisition standpoint, a condition of closing is to make sure that this is all signed and agreed on prior to reclosing on the property.
Right. No, I love that. It's a unique strategy in a way to add value to a property, that probably not everyone's not employing. So I love the thought process there. Is there a particular type of apartment complex that you have to do this in, or is it you can take anything and do it? Like what's the buy box look like on the asset?
Yeah, well, there's a couple ways to kind of decipher how and where to do this, right, Sam? So we like Texas. There's pretty high property tax rate there, the millage rate, 2.5%, 3%, whatever it might be today. They also reassess regularly, and so you have a high likelihood of property taxes going up. And so that's a favorable environment, but you also have kind of the regulatory environment there too, with the counties and municipalities, all not all, but many of them being on board, understanding this type of structure and providing it. And so if you go and compare that to, other states that maybe have much lower property taxes or aren't open to this idea, it's going to be very hard to do. So location is relatively, I don't want to say fixed. There's other areas where it could work too. We're focusing predominantly in Texas on this. And so that's kind of how we're looking at it, how we're doing it. I don't know if there was another part of your question, Sam, but feel free to chime in again. And
I think you've answered it well. Let's shift gears here a little bit. Thanks for taking the time to break down your guys' affordable housing strategy. We didn't talk much about mobile home parks, but I do want to make sure that if we have time, maybe we'll come back to that. But I'd love to hear what else you guys are doing. I know that it sounds like the affordable housing component is part of you're kind of pivoting with the market, but let's talk about what you guys are doing strategically right now to pivot with the market, where we are in these market conditions. I mean, just kind of give us what you see and how you guys are approaching things right now.
Sure. Yeah. And I'll share maybe a little evolution. I'll keep it quick, but we've pivoted several times, Sam, over the last, call it 10, 12 years with the markets. First pivot for us was like 2017-ish. We really stopped investing in single family, small multifamily, Sam, and focused all of our effort in commercial, institutional quality housing. And we did that for a number of reasons, but predominantly at that time, we just saw less margin, a lot of competition. We saw less deeply discounted properties, and that kind of window of opportunity post-recession was closing, to say the least.
Yeah.
So we pivoted there. Then 2018, we started to think and see some indicators that there could be a recession soon. And so